next guest is predicting a, quote, global EV meltdown, while the other's outlook is quite positive. Joining us today, former Ford CEO Mark Fields, now a Hertz board member and CNBC contributor, and Deutsche's lead auto analyst, Emmanuel Rosner. Guys, it's great to have you. Emmanuel, your note raised some eyebrows a few days ago where you talked about the early playbook for such a meltdown. And we've talked about sticker shock and range anxiety and the lack of new models and gas prices are tame. But is meltdown the right word to use?
I think it's a meltdown in investor expectations and certainly in stock prices. In terms of EV adoption, it's probably more a slowdown, for the time being. But the expectations were so high that we're really seeing a collapse in this. And to your point, it's about affordability and it's other sort of things like range anxiety. But on the affordability side, what concerns us is most automakers haven't cracked the economics to make an EV affordable. And as a result, we don't really see a path in the near term for this to happen. It could take several years until such models come out. And this is going to continue to put tremendous pressure, I think, on both their earnings, but also probably on the stock prices.
Mark, even some players who've tried to leverage the growth, Hertz is a great example, have come out in the past few days talking about some of the challenges.
Well, clearly what we've seen, Carl, is, listen, the bottom line is EV demand is cooling as the early adopter phase kind of wanes off. But, you got a challenge in the industry. And listen, I hear Emmanuel's term around an EV meltdown. I think that's very true, particularly for the new companies that have come on and are solely EVs and at very high price points. I think the established OEMs, like GM, Ford, Stellantis, et cetera, listen, they're going to have challenges, but, they have their ICE business, which the internal combustion engine business, which helps fund their investments in EVs. And it's going to take longer now because you're seeing almost the EV market is acting very much like what I would say the industry of old, the auto industry of old, with price cuts, rising inventory, increased incentives to kind of juice market demand. And you're seeing the automakers, take a very rational approach that says, listen, we were ahead of the curve here in terms of consumer acceptance, so we're going to push back investments. But from where we stood 6 months ago, it's going to be a more challenging time for everyone involved in the EV market right now.
Yeah, well, Mark, you used that word challenging twice. So what does that actually look like? Does it delay, but it still means the transition comes? Or, are we waiting a lot longer, perhaps?
Well, I think this is going to be an inexorable, in my view, transition in propulsion systems. But to your point, David, it's going to take longer than everybody expected. I mean, at the end of the day, you're having the established automakers pushing out these investments to save capital. But let's face it, General Motors is still sticking to their plan of having 1 million units of production capacity by the end of 2025. And as they close out 2023, they'll be challenged. They'll be selling slightly less than 100,000 EVs. So that's a 10x increase in the next 2 years. And yes, they're coming out with new products. But at the end of the day, the challenges for consumers are cost. EVs still, even though they've come down significantly this year, about 20-25%, they're still more costly than ICE vehicles. But most importantly, and you mentioned this, David, is it used to be called range anxiety. I actually think it's charging anxiety at this point because of the lack of charging infrastructure.